In this demonstration video, we will go ahead and look at sales made with bank credit cards and American Express, including sales tax. Before this video, we looked at sales transactions with sales tax. This one is going to include sales basically on account with bank credit cards and American Express, including the sales tax. Now remember, within your reading in the textbook, credit cards and American Express transactions are recorded a little different. So let's go ahead and get started. Record the following transactions of Lisa's Fashion Boutique in a general journal. Assume 8% tax for sales tax. We're going to round intermediate calculations and final answers to 2 decimal places. So make sure if this direction is stated in your problem in McGraw-Hill, make sure you do this to get the correct answers. If you do not do this, McGraw-Hill will mark it incorrect. All right, so let's go ahead and get started with our journal entries. So our first transaction is on February 2nd. Okay, so on February 2nd, we sold merchandise totaling $3,800 to customers using bank credit cards. Record the 2% discount of the credit card sales at time of the sale. Okay, so what we're going to do is this. We have to record the cash that came in. Okay, so this cash is going to be, for now, let's leave that blank. We know that we will record a credit card expense for this transaction as the customer is using a bank credit card. We will record the sale. So the sale amount is the definite amount of $3,800. Okay. We will go ahead and look at the sales tax as well, because we know the sales tax is 8% of that sale. So I'm going to take $3,800. I'm going to multiply that by 8% to arrive at $304. Okay. So my cash, I know, okay, my cash is going to be, well, let's go ahead and look at the credit card expense first. The credit card expense is going to be the sales, the $3,800, plus the sales tax, okay. I'm going to go ahead and put that into parentheses, telling Excel to take $3,800 plus $304 first, and then multiply that by the 2%, because that is the 2% discount on the credit card sales that us as the institution have to pay. Okay, so the credit card expense to us as the company is $82.08 for allowing this customer to be doing business with us using a bank credit card. So my cash is going to be $3,800 plus $304 minus the $82.08. I am going to receive, hold on here, I'm going to receive $4,021.92 from this customer for this transaction, due to the fact that we are paying $82.08 in credit card expense with this sale here. Okay, so first of all, what you want to do is record your sale first, because that's definite. Record your sales tax payable, because we know that that's 8% of the tax. Record your credit card expense. So your credit card expense is going to be the sales plus the $304, which is your sales tax, times 2%. That's going to be your credit card expense based on the sales and the sales tax. Okay. Now, once you have the $82.08 as the credit card expense, you can take $3,800 plus $304 minus the $82.08 to equal the cash that you will be receiving in. So basically, overall, take the amount that you're going to be receiving in, subtract your credit card expense, and that is the actual cash you'll get. Okay. February 15th. They sold merchandise totaling $2,100 to customers using American Express. Okay, so with American Express, it's going to be a little different in recording. We know that we will be receiving amounts later on. So accounts receivable will be debited. And that's going to be from American Express. Okay. Even though we sold merchandise to a customer and they use we are not going to be receiving this amount from the customer. We're going to be receiving this amount from American Express. So think of it as you using your American Express card. You technically have already paid for it. The company will receive the money from American Express, which is why we are saying that the money will be receivable or received later from American Express here in this situation. Okay, I know that I have to record the sale, and my sales, the definite amount for my sales is the $2,100. Okay, of course we have to record the sales tax. Once again, sales tax payable is the $2,100 times the 8%, which is $168. Okay. And my total to be received from American Express is $2,100 plus the sales tax of $168. Okay, on February 20th, okay, this is where we will receive the amount due from this transaction here. We're going to less the 3% discount because American Express charges 3% to do business. Okay, so for that sale. So this is how we will record it. First of all, we record it for the full amount of the sale, which is $2,100 plus the sales tax payable for a total of $2,268. Okay, we have now this in our accounting system. Once we receive the payment from the February 15th on the 20th, we are going to record a credit card expense. Okay, we are also going to record the cash that we're getting in from American Express. The offset is going to be reduced. In this demonstration video, we will go over sales made for cash. Okay, there we go. We're going to go ahead and reduce this accounts receivable from American Express because they are paying us. That amount will be reduced by the full $2,268, okay, because they are paying us. The breakout of the $2,268 is basically this. I'm going to take $2,268 times 3% because that's what they're charging. That's expense to us. The 3% of the $2,268 is $68. That's an expense to us as the company for allowing this customer to do business with us using an American Express credit card. So my cash that American Express will be sending me is the $2,268 minus the $68 in the expense that we have to pay for. So instead of receiving $2,268 from American Express due to the 3% discount or expense, I'm only receiving $2,200. Okay, so that's the roundup of this example.